2 minutes here until the bell. We have stocks on track to post our best week in a month. We want to break all of this down. We have Dave Ragland. He's our IRC's Wealth CEO. We're also joined by Jay Jacobs, Senior Vice President and Head of Research and Strategy at Global X ETFs. Jay, first with you, at record highs this week, the best week that we have seen in months. Where do you think we're headed from here?
Well, we finally have a few catalysts that are pushing this market forward. We had a pretty trendless May in the beginning of June, but now we have the Fed recognizing inflation and pulling forward its interest rate increases, which should fight it. And now we have the infrastructure bill that Biden has agreed with bipartisan senators. So that's two really positive catalysts that I think are going to continue to propel the markets into the summer.
And let me get your take, David, on what's happening in the bond market right now. We've seen the 5-year kind of explode to the upside, the 10-year a little bit less, coming off of the lows. What do you see? What's the outlook for the bond market, and how related to this latest infrastructure development is it?
Well, we still see the bond market moving higher towards the end of the year. We could see rates 175, 2.0 on the 10-year bond, just because we've got another stimulus package that just got released. So we've got a lot of money. We've got a lot of growth within the economy right now. So I think that's going to pressure the bond market longer term.
All right, let's take a look at where things stand. Again, we're under a minute here until the bell. You're looking at gains across the board. Up, no longer is the case. The Nasdaq flipping back into negative territory. The S&P, though, holding on to gains for today, up just around 0.3%. The Dow up 257 points for the week, though. We are seeing gains across the board with stocks on track to post their best week that we have seen in months. Taking a look at some of the individual leaders, Nike by far the winner in the Dow today, up just around 15% following its record-setting results after the bell yesterday. JP Morgan and Travelers also ran on the top performers in the Dow.
There you have the closing bell, and that is the gavel. Let's just take a look at the closing prices here. We got the Dow closing at 34,436. That's good enough for 234 points, or 240 points. We got the S&P 500 up 0.33%, and the Nasdaq just kind of slipping into the red there, down 6 basis points. But I want to get back to our panel now, and let me throw a question to you, David. Now, we've seen a bunch of stealth rotations, and some of them have been painful this year, kind of violent, from growth to the value and cyclicals. What do you see for not the rest of the summer, but mainly kind of heading into earnings season when we do have this news vacuum over the next couple of weeks?
Yeah, we still feel like that we're going to rotate back into the value cyclical trade at this point in time, because you've got so much growth coming out there. I think earnings expectations are high, but I do believe that earnings are going to meet and in some circumstances exceed. I think the tech rotation has come back, but the increase in the bond prices that we're seeing is going to keep a lid more on the overall averages, more on the tech sector. So I would still lean, industrials, cyclicals, oil, banks, especially if we get the bonds to move back up. I think the financials will react very well as well. Plus, in addition to that, you just had the banks being allowed to increase their dividends, increase their buybacks, just got through with the stress test. So I think that's very good news for the banking sector.
Jay, you mentioned some of the catalysts that we're seeing that are pushing stocks here to record highs. You mentioned infrastructure. When it comes to that, where are you seeing investment opportunity there?
Been positioned in a few different segments. One is we've been looking at construction and engineering companies, the companies that are actually going to get this money and build stuff with it. A little bit further upstream, we're looking at some of the machinery that's going to help build this, and we're also looking at the raw materials, concrete, copper, that are going to be pouring into things like roads and highways and broadband internet and refreshed electrical grids. So it's not existing infrastructure. It's not MLPs and midstream. It's not, toll roads and airports. It's the companies that are going to benefit from building new infrastructure that will win from this $500 billion plus plan.
And we want to go back to you, David, and ask about what we're seeing in some of the meme stocks, because we've seen those pick up again this week. I was just going over Express, and they're up 55%. A lot of analysts don't want to touch this space, but how do you see this shaping up for the retail trader?
it's really tough for the retail trader at this point in time, unless you're sitting in front of a computer. I just had a conversation with another new client talking about the day trading, the meme stocks. Sure, you can make money, but is that a real long-term strategy for your overall wealth development? It's not something that we're going to recommend a client to do. Obviously, you've got to be fast on the trigger if you're going to play in this area. We obviously saw BlackBerry, which at one point in time was up over $30, hit earnings and fell. Because even though they give great earnings or have a great outlook, it's more of the buy on the rumor, sell on the news.
Hey, Jay, when it comes to, I guess, consumer spending, one of the numbers that we got out this morning, missing expectations, we saw it flat. Is that something that you're worried about just in terms of the slowdown there and what that could mean for the economy and eventually the markets here going forward?
I am, and I think this is a little bit directly related to inflation. You had all this pent-up consumer demand because of the pandemic. People wanted to go out, they wanted to go to restaurants, they wanted to buy things again now that they could leave their homes. But they're seeing prices that I think have, frankly, sticker shock when they go out to buy things. That's kind of pulling people back in and saying, maybe we wait this out, maybe we see if prices normalize a little bit in the future. We had a bad print in retail in May. We're seeing another one now. I think it's really going to potentially continue into the summer unless we start to see prices come under control. So this could be a big negative for retail.
You don't have to. These are different computers. I'm restarting the PC. Mac is fine. No.
All right, guys. Well, Jay Jacobs, Senior Vice President and Head of Research and Strategy at Global X ETFs, and David Ragland, IRC Wealth CEO. Thank you both for joining us today.